Over the past few months, Bitcoin has been in a continual downtrend, the perfect shorting opportunity when we were rejected from that multi-month downtrend that we highlighted earlier on this channel. In fact, making it one of the worst downtrends we've ever seen with Bitcoin, printing 9 consecutive red weekly candles in a row, with the previous record being set at just 5 or 6 candles. Now, historically, these red weekly candle streaks have actually preceded even further downside for Bitcoin. With the previous records being at 5 or 6 candles, we did see even further downside with it printing the 9th red candle just a week ago. Now, does this mean that the bottom is in and that we're about to reverse and go back up? Not necessarily. There is still potential for further downside due to the global macroeconomic environment not looking the best, as well as potential lower buy-side pressure, which we'll take a look at in the chart in a few minutes. Now, I might not have been as active here on YouTube over the past few months. However, we have been very active in the Patreon, highlighting these exact levels for the past few months. Now, on March 8th, just over 3 months ago, I made an announcement stating that my long-term target ranges for Ethereum are the $1,300 to $1,700 zone over here, as well as the 20 to 28K region for Bitcoin. Now, we have reached the upper bounds of these ranges for both Bitcoin and Ethereum, with Bitcoin hitting the 28K region right at the top of it, as well as Ethereum hitting the $1,700 zone, very similar to when it hit the same region back in July 2021. However, things are a little bit different this time around. We're not seeing the same buy-side pressure. We're not seeing a fast rebound. We're not seeing a lot of buying volume. We're seeing an actual decline in the volume. The same thing for Bitcoin. We're seeing a decline in volume that we've been seeing over the past few months. A clear decline that we have here, clear more selling pressure with a range or hitting the bottom of that range, meaning that there is very much a likelihood for further downside here. Now, it doesn't necessarily mean that we are going back down. All I'm saying is that we need to be very, very aware of our probabilities. This is all a probability game. Which scenario is more likely to play out? Now, with investors being risk averse, with the Fed being more hawkish, people are looking for places to save their capital, looking for places to put their money to protect them from further downside. Now, whether that means keeping it in cash or potentially investing in higher upside assets like Bitcoin, like Ethereum, which are risk-on assets, there is potential higher upside than there is downside because people are looking for places to place their capital. And if you look at traditional assets or traditional markets like the Nasdaq and the S&P 500, you'll notice that they are also down significant amounts from their all-time high, with the S&P being down 18%. We've got the Nasdaq being down 30% from its all-time high. We've got Apple also being down significant amount, 25%. We've got stocks like Tesla being down significant amounts, 44%, and stocks like Netflix being down over 70% from their all-time highs, which at this stage are competing with the risk-on assets like Bitcoin and Ethereum and other altcoins. Now, what does that mean for us? Does this mean that we're going even further downside? Well, depends. We have had some serious events of the recent months, like the Luna crash, which, by the way, we did take a look at in the Patreon right before that crash happened. We had some calculations saying that if Luna did drop below $45, there's very likelihood that they wouldn't be able to sustain the price. UST would lose its peg and Luna may go to zero. So we did quite predict that, even though it's not something that I wished would have happened, as I was a proponent of Luna and the Terra ecosystem. It's something that I believed in and that I believed had strong potential in the future. We have to be very, very aware of our assets and our emotional attachment to those assets. Something I've spoken about many, many times on this channel, that if you're emotionally attached to your investments, you need to remove that emotional attachment because they are simply just assets. Of course, there's this cult-like environment around many of these assets, especially in the cryptocurrency world, where you do find a community, you do find similar believers and people who believe in the same future of technology and Web3 adoption that you do, and it can become very, very easy to fall into the trap of emotional attachment towards your investment. But if you keep a clear mind and a sound mind and take profits when necessary, then you may be sitting much prettier right now and protect your portfolio from further downside had you been overinvested or over-leveraged in many of these assets. So always be aware of your emotional attachment to those investments, because you could potentially see very, very horrible downside, as we noticed with the Luna UST crash. There were even hedge funds who lost billions of dollars in this crash that were possibly overinvested, over-leveraged in the potential of this asset and this asset class, which is why we need to be very, very aware of the potential downsides for this too. Now, if we take a look at something like options traders and what they're looking like at the market right now, are they risk averse? Are they looking to buy in? What are the options traders looking at? And why do we look at options traders when looking at the markets? Well, the reason being is that options traders are generally more leveraged, have more capital and more advanced traders than those who are simply spot buying and retail investors. And if we take a look at the delta skew, you'll notice that we have a 25% delta skew, signaling that whenever whales and arbitrage desks overcharge for upside or downside protection, it generally means they are more risk averse. So if those traders fear an ether price crash, the skew indicator will move above 10%. On the other hand, the generalized excitement reflects a negative 10% skew. That is precisely why the metric is known as the Pro Traders Fear and Greed Index. Now, you guys might be already familiar with the Fear and Greed Index. We've mentioned it many times on this channel. And it does take a few different factors into account when trying to figure out what is going on with the market. Now, over the past few months, we've been in extreme fear, and this takes into account a few different factors. We've got volatility of the market, the momentum, social media, surveys, dominance, trends. It takes a look at social data. It takes a look at traders' sentiment on social media. There's a lot of these factors that come into play here. However, if we're looking at the options traders, we're looking at purely what their delta skew is and whether they're willing to overcharge or undercharge, and that helps us outline whether the pro traders are more fearful of further downside. And as we can see right now, they are quite fearful that there's potential further downside for the market. So the skew indicator has been above 10% since the 22nd of May, and it recently peaked at 20% on June 3rd. These levels signal extreme fear from options traders despite the modest improvement. The current 17% delta skew shows whales and arbitrage desks are unwilling to take downside risk, meaning that they are sitting cash heavy, they are not willing to trade on this downside movement, and are actually possibly even betting against the market, meaning that they're likely to go downwards. Now, this crypto fear and greed index is something that I do pay a lot of attention to as well, because it also takes a lot of sentiment or a lot of data from the retail side of trading. At least the huge rallies that we see in Bitcoin and Ethereum are generally very much retail fueled rallies, meaning that people like you and I and many other possibly unsophisticated investors, as the Fed and the SEC would call us, are the ones fueling the rally or the market rallies. But if you pay closer attention and you understand how the markets are moving and where the sentiment is shifting, it'll give you a better idea of when to buy and when to dollar cost average into the market, or if you are an options trader or a leverage trader, when the best opportunity to go short or long is. Especially during periods of this, your risk to reward ratio of further downside is minimized, as I just mentioned in the beginning of this video. Now, we do have some positive side effects or positive news catalysts that may be helping the market in the near-term future, such as, of course, the Ropsten upgrade for Ethereum, moving from proof of work to a proof of stake network. The Ropsten testnet merge went through successfully very recently, meaning that we're one step closer to that potential live network shift to proof of stake, which eventually would turn Ethereum into a possibly carbon neutral asset, as that's one of the major criticisms of cryptocurrency, Bitcoin and Ethereum, is the mining aspect of it and how much environmental damage and impact it has. However, if we do switch over to proof of stake for Ethereum, as far as I understand, it will be over 99% more efficient and more positive for the environment, meaning that we might get a change in sentiment towards these risk-on assets that are destroying our environment. But that being said, we have to keep an eye on the global market. And the reason being is that when the markets enter a recession, we have stagflation, we see people being afraid to invest their capital, not being able to invest their capital because they don't have any, because they've either lost it in the stock market, they've lost it trading cryptocurrency, they don't have it, they're being laid off, they're losing their jobs. These are times of recession. These are times when people don't have spare capital to risk, they don't have spare capital to invest. So while we might be entering a stage where people are looking to put their excess capital, they don't have that capital to begin with, so they can't invest it in the markets like cryptocurrency. So you might see announcements like this saying that MasterCard is about to allow 2.9 billion cardholders to make direct NFT purchases. And while this is a very positive event for the crypto economy as a whole, meaning that there's this huge new on-ramp for members or users to get into the cryptocurrency space by buying things like NFTs, which very much onboarded a lot of new users into the crypto space over the past 2 years, especially with retail traders not really understanding what crypto is or how to get into crypto, but getting into crypto through the NFT space. There's many NFT traders that I've spoken to that didn't quite understand what cryptocurrency is, but they just knew that they had to buy their Ethereum and Solana to get their NFTs. This is a great onboarding solution to getting those people into the crypto sphere. However, if people simply do not have extra money to spend, do not have extra money to invest, these sort of news events are met with stagnation in the crypto markets because people don't have that capital to invest. So they're just going to sit on the sidelines, even though these new tools are available to them to allow them to onboard into the crypto sphere. So that's something that we have to keep in mind, that where is this additional capital going to come from? If the world is struggling, if we enter a recession, that capital is not going to flow directly to risk on assets specifically, such as the crypto market. So we need to be very, very aware of that. We could also take a look at something like the Bitcoin dominance chart. And this is something that I've mentioned very, very closely on this channel many, many times before, and something that we should pay a lot of attention to if you're looking for different assets to invest in or purchase. Which ones are you keeping your eye on? And the reason being is that during a downtrend, generally that's when altcoins outperform Bitcoin, because a lot of capital is flowing from the outside market as well as away from Bitcoin or profit from Bitcoin into those altcoins. However, when Bitcoin dominance turns around and goes up, that generally means more capital is flowing into Bitcoin away from altcoins. Now, during a downtrend like this over the past few months, when both altcoins and Bitcoin have been in a major downtrend, when we see a reversal in Bitcoin dominance like this, generally that means that capital is flowing away from altcoins and back into Bitcoin. But when Bitcoin dominance reverses, that capital doesn't necessarily flow back to altcoins. It generally flows out of the market, reason being is that people are now looking to take profits away from Bitcoin and away from risk on assets such as altcoins. So we have to be very aware of how important this is, and we very likely would potentially see a Bitcoin dominance over 50% in the coming weeks, possibly even in June, which means that we could be nearing a reversal and then a potential even further downside for both altcoins and potentially Bitcoin as well, as the dominance drops and we see capital flee the market. So these are very, very important factors to keep in mind if we're trying to manage our risk to reward ratio over the coming weeks, as to where this capital is coming from, where it's going to, and what the sentiment and the minds of traders are like right now. If you want further details of this, of course, you can check out my Patreon. I do have a lot of information there. I post a lot of detailed analysis of the market, much more detailed than here on YouTube, as I have a lot more space to create that content. As you guys know, these videos can take a while. That being said, if you haven't yet, this weekend we are doing an upgrade to the Nostalgia NFT. Now, you guys know that I do have an NFT project as well, and we are doing an update to the art. So we're going to do a reveal party coming on June 12th. So if you aren't there, go ahead, head over to Twitter and set yourself a reminder and join the reveal party. We are upgrading our art. We're converting it into a generative art set. So everyone will have a unique NFT with unique traits and unique rarity. And it will, of course, also grant you access to the private Discord community. So if you haven't yet, you can go ahead and check that out, where we have weekly calls. We have the call recordings in there as well. We have some crypto alpha, some NFT alpha as well, highlighting some of the best new projects, some of the projects that we're getting into, some of the projects that we're buying, as well as just a general chat and cool place to be with other crypto and NFT enthusiasts. So if you do want to be a part of that, please don't forget to check out the link down in the description below. I do have some links there as well for Femex and Bybit if you want some bonuses, if you want to trade the market and trade these moves to the downside and the upside. Remember, you can make capital or make gains going up or down in the market depending on how you invest and what your risk appetite is like. Do not over leverage yourself. If you don't know how to trade, stay away from that, or at least learn how to do that first. If you guys want me to make a tutorial on this channel of how to do that, comment down below, show us what to do. As always, I shall see you in the next video. Bye bye.